time for my favorite part of the show, Money Power Politics. Payday lenders. I have talked about them before, the worst of the worst. They scored a massive victory with the Trump administration, rolling back restrictions that were set to take effect later this year. I remember it was Corey Lewandowski who was working with some of them in a lobbyist capacity. The Consumer Financial Protection Bureau says it plans to abandon Obama-era rules that required lenders to ensure borrowers could repay their loans before issuing them. The goal was to help prevent borrowers from getting sucked into debt traps. That's when borrowers cannot pay back their loan right away, taking several months to do so, costing them hundreds of dollars in finance charges on top of the original loan amount. It is a vortex that crushes people. Many of these loans have interest rates, are you ready for this, of 400%. That is 20 times higher than the average credit card. There are 23,000 payday lenders across the nation, almost twice the number of McDonald's fast food chains. And almost 10 million millennials have taken out one of these loans in the last 2 years. This is so upsetting to me. Joining me now, CNBC contributor Josh Brown and Tim O'Brien back with us. Why? Walk me through. Why would the Trump administration roll back these regulations?
Well, some would say cruelty is the whole point, which we've heard on a lot of other
let's
subjects,
not be sassy. Let's be serious. What's their argument?
Well, so let's just look at this pragmatically. This is a lobby that's extraordinarily powerful. They have a lot of money to throw around. It's no different than the credit card lobby, brokerage firm lobby. They have members, and the members want results. And in this case, you have a very malleable administration that really looks at the business of business as what they're supposed to focus on and not what the effects are on the consumer. So we now have a Consumer Financial Protection Bureau that, quite frankly, is working harder to remove regulation than to enforce regulation. And this is one more example.
But what is the rational argument that the current regulators would make for why this makes sense? That's what I don't understand.
Well, I think this is a reflection of Mick Mulvaney's sort of dog-eat-dog view of financial efficiency, that if you have rules, they get in the way, and that if there aren't rules, people then have to fend for themselves. They prove their wiles by whether or not they're able to make money. And if they get picked off in the process, so be it. I don't think any economy that actually functions well or brings people into the middle class, which good economies do, function that way. But he's got a deep philosophic attachment to that notion, and it's coming home to roost about lifting regulations on payday loans.
Except, of course, people are not going to payday lenders to buy their first home. They're going to payday lenders to pay their medical bills.
Because they're in trouble.
They're going to payday lenders when their car is broken and they got to get it fixed so they can get to work. You've made a broader point, Josh, that what we're seeing with this administration is a new battleground of rolling back regulations versus sort of rampant inequality.
Yeah. So on the one hand, we've got senators writing op-eds about stock buybacks. On the other hand, we've got a situation where $29 billion worth of payday loans were made last year, racking up $5 billion in fees, and almost all of that is coming at the expense of people who literally are the most vulnerable.
Fees.
The most vulnerable. So the bigger picture is that the pendulum is swinging back. You almost look at this and you say it ain't going to matter because people are sick and tired on both sides of the aisle of this kind of oppressive behavior from the financial industry.
But they're not, though. But hold on a second. They say that they are. We were all here after the financial crisis. And that sort of led to the President Obama calling them fat cat bankers, America being furious that nobody went to jail. Not that furious, because then President Trump was elected. He surrounded himself with Gary Cohn and Wilbur Ross, and they said, hey, let's get rid of Dodd-Frank. And while you're at it, who needs the Volcker Rule?
Well, the argument was it would help them, but they're seeing that it isn't. So you can't tell someone, I'm helping you, and smack them in the face by allowing financial institutions to take advantage of them. It can't go on indefinitely forever. At a certain point, there will be a realization. I don't know if that's 2020 or 2022 in the next midterms, but people are going to wake up and say, you know what it turns out? This rampant laissez-faire Ayn Rand philosophy of financial markets and banking institutions, this didn't go my way. This didn't work out for me. And people will have their minds changed by reality if not by political arguments.
You know, when you bring up the financial crisis, Donald Trump is an outcome of the financial crisis. His presidency is a reflection of the distress that average Americans felt in the wake of that meltdown, where they lost homes, they lost their pensions, they lost their children's savings for their children's colleges, and large U.S. institutions overlooked them. Both parties overlooked them to some extent, the media overlooked them, and the business world overlooked them. And people in the heartland said Wall Street got bailed out.
That's really important.
We didn't get bailed out. And now what you've had is a team coming in there and are deregulating rules that are meant to protect unsophisticated, low-income people from digging financial graves for themselves.
And this is what I don't understand. So I'm with you that sort of the rise of the Trump voter, that forgotten American who saw President Obama in his last State of the Union talk about the great financial recovery, those people looked at him and said, screw you, dude. I didn't have any recovery. And then Trump gets elected, and this deregulatory environment is only going to hurt his base.
They're being told, here's what they're being, first of all, none of this payday lending activity that you detailed at the top of the segment would exist if there weren't a need for it. So we're talking about the symptom. The cause of this is that half the country can't access $500 in an emergency.
That's a great point.
So they're being told that if we regulate financial institutions, then you'll have access to no money, which, of course, is an absolute lie. It's the same lie they tell about why Wall Street needs to be more lightly regulated.
And let's talk about what that money is. If your car breaks down, that you need to go to work, and you don't have enough money to get it repaired. You cannot earn a living. This isn't people borrowing money to get jewelry. This isn't people borrowing money to take a vacation. Generally, it's people borrowing money to keep their lives together. And we used to call this loan sharking. We didn't call it payday lending.
It is loan sharking.
The regulations that they want to remove are astounding. When you say to yourself, why is that bad? So they want to take away these cooling off periods so that people can take consecutive loans, one after another after another. You're almost guaranteed to get yourself bankrupt if you're doing that. And they want to remove any restriction whatsoever from these types of loans. And that's really the issue. It's not just payday loans. It's unrestricted payday loans. It's going to kill people.
Thank you both. This is a really important conversation. And Mick Mulvaney, or any other official from the CFPB, I invite you to join me on air. If we're getting this wrong, explain it to us. But the way it seems to me, to us, I'm going to say collectively, it is so predatory, it is so abusive to the people who need the most help out there. If we've got it wrong, explain it.
Hey there, I'm Chris Hayes from MSNBC. Thanks for watching MSNBC on YouTube. If you want to keep up to date with the videos we're putting out, you can click subscribe just below me, or click over on this list to see lots of other great videos.